This podcast is proudly sponsored by Gyro Drilling. They provide world-class drilling solutions for all types of projects. They specialise in auger, aircore and RC drilling. Head to the team at Gyro Drilling for all your mining needs and see how they can help you with your upcoming project. Hello, I'm Ben Kostrich and this is the Market Bull Podcast. As this podcast grows, every subscriber helps. From those of you who watch this on YouTube or to those that listen on Spotify and Apple, every follower helps. If you do this one favour and hit follow on whatever platform you find us on, I promise I will continue to look and find fascinating people across the world and bring their perspectives to you. Thank you and enjoy this episode. So hello, I'm Ben Kostrich and this is the Market Bull Podcast. Joining me today in the studio is Phil Russo, the CEO and Executive Director of Toubani Resources, which is listed on the ASX under code TRE. It's a West African exploration company in the gold arena, and we know gold has exploded on the spot price recently, so it must be quite fun being a gold explorer at the moment. But welcome to the show, Phil.
Oh, thanks for having me, Ben. It's great to be here.
We're talking, there's been a fair bit of activity from your end, but I always like to get to know who I'm speaking with and a bit of their story and how they get to where they are. So for those that are unfamiliar with your story and your exposure with the mining scene, tell us a little bit about your backstory.
Yeah, so I'm over 20 years experience in the industry. I was just saying to someone the other day, and I'm not one of the older, more seasoned guys, but even I remember gold at $500 an ounce. So in the 2000s, so that's shows you how far we've come. But yeah, I started at my days at Barrick here in Australia, and then ended up in North America with Barrick, and then crossed to the dark side of capital markets and at a US investment bank, and then back. So I lived in Canada there for 10 years, and then ended up back home in Perth in Australia here, and then jumped between a few different corporates. Most recently Perseus, and then into this position at Toubani.
Okay, and then again, the opportunity to jump onto this project. I mean, what was the inclination to take on this role in West Africa?
Oh, look, I was very excited when this one came across my desk, and I'm sure we'll get into it today. But what really compelled me with this opportunity is it's not a drill hole story. It already had $100 million of invested capital in here before I joined the company. It's had over 160,000 metres of drilling already put into this asset, and for me it was about sort of steering it towards an outcome. And so there was that component that was really appealing. Regionally, this is a district. We'll talk about it as well. There's other companies drilling and exploring around us, and so there was ways to really unlock value and make money for shareholders that really enticed me. And I think it draws upon my skill set here, because we're in study phase. That's where I cut my teeth at Barrick in the study area, and so. This is an exciting time for Toubani, which is, since I joined, it's been this 12-month journey to get to this position now where we've got a line of sight on the study. And so that's why I'm very, very excited from here. And that's what motivated me to join, because I can see an asset here that won't stay a project for too long. It'll become a mine, and that's what we're here for.
So then the history of this project, I mean, if we paint the picture of where Toubani is, and I mean, some of the history about it. I mean, 100 million previous work done is no small amount. I mean, talk us through that whole area, that package, and again, how have you guys now stumbled across this really quite nice opportunity?
Yeah, well, look, if you look at our share register, there's a few very smart resource funds on our register that, for our market cap, sort of speaks to, well, why are they here? And there's a very strong opportunity here at the asset level, and so this asset's had different incarnations in its history, dating in Canada, and I think that's where these Australian funds got involved, agitated for change, and then they brought it to the ASX, and then that's when I joined in early 2023, and the company's had a complete refresh. So we were fortunate to inherit all that work and money spent, But from the board down to senior management to technical teams, we've done a complete refresh and rebadge. And that's, so way people looked at the asset in the past as either a small or a high-grade project or too lower grade, we've been able to reposition it. Now we've got really clear line of sight on what we think will be a really attractive project. And so that's the origins. There's been a couple of, call it false starts that haven't gained traction in the market, but we think we've got the project on the right rails here to deliver something the market's going to like.
Yeah, gotcha. And you were saying before about some of the success in that surrounding area. I mean, again, West Africa, there's quite a few big miners that are inhabiting that area. And you're in Mali, if I'm correct in saying that's where the project is. I mean, who's in that surrounding area around you guys? I mean, what success have they got? And then, I mean, this is leading to the path we'll deep down into the main project. But
yeah, look, we're in southern Mali and we make no apologies about that. So, you know, if you go through all these West African countries, they all have their peaks and troughs in terms of the political backdrop. And so Mali, you know, Mali is a mining powerhouse, right? It's the third biggest gold producer in Africa or West Africa, I forget exactly that one. And its mining industry is very mature. Like the institutions of mining have been there for decades, and there are big companies. The biggest gold mines in West Africa are in Mali. So Barrick, the biggest gold miner in the world, has a big project a big asset in Mali. There's B2 Gold with Fekola, big. These are talking 500,000 ounce a year production assets. And there's Resolute that everyone's aware of, and there's Allied that just completed an IPO using a Mali asset, Sadiola, to underpin that IPO. So, and there's heaps of explorers and aspiring developers. There's, you know, Leo Lithium is there. There's other lithium guys coming through. So it's the biggest contributor to their GDP. And so it's no flash in the pan country. So it understands mining. Its supply chains are all there to support mining. We don't have any expats on site, right? It's all Malians, and they do a great job. And so when I look at a country, what are the two things as an investor you want to see and hear? And one is, does it have local community support? And we have that. We have 5 villages around us. They all want to see a mine built. And secondly, does the government support mining? And you can't say that Mali doesn't support mining. It clearly wants to have a relevant mining industry. I don't know if you can say those same things for South America.
Yeah.
You know, like you get strong community protests on assets there, and you got governments that can do some pretty wild things. So if you got those two ingredients, the rest is just noise or risk you have to navigate your way through.
Yeah.
And that doesn't sort of keep me up at night, but that's just things we got to navigate having an asset in West Africa.
Yeah, undoubtedly there's always that term thrown around of sovereign risk, and almost people have their biases on, because it's not in a tier 1 jurisdiction or whatever, there's inherent risks. And I think no matter what exploration game you're in, there are risks, and it's more about, well, understanding how you get those sorts of ticks of approval, and then it's, well, we shouldn't really differentiate between where it is. But if we drill down, pun intended, on the actual flagship project, talk us through a little bit about that project and why it's quite unique. Because when I was going through some of the, presentations and some of the work, it's a little bit different to other gold projects, other gold explorers, at least from my understanding. So, yeah, a little bit of information about that.
Yeah, look, Kobada. If Kobada was in WA, it would have been mined out 50 years ago. So, but it's in West Africa, and you know there's an audience of capital and suitors and corporates all plying their trade in West Africa. And what's appealing about Kobada is the wealth of this soft rock material that we have. So our weathering profile, this free dig material, goes down 70 metres on average, but we see it more like 100 metres in places, plus 100 metres in places. And it's quite a unique advantage for the project, because that's, so no drill and blast, free dig. We've got a low strip here, high recovery. So you've got all the ingredients, and this is what we say quite a lot, is it's margin over grade. We've just fixated on getting our all-in sustaining costs as low as you can, right? So because if you look at the bigger producers, what's underpinning them are these assets delivering lots and lots of cash, and it's a low AISC profile. And so that's what we're fixated on, and that's what Kobada can do given the abundance of this soft rock ore. And so it's 4.5 kilometre long pit, and it's a simple project. We're just talking about a rock factory here. We're just going to bulk it out, put it through a big mill, and produce a lot of gold per year, hopefully, in this DFS that we're looking to deliver. But I'm only talking about the oxide potential in one pit. That's in 5 kilometres of strike. There's 50 kilometres of shear zones on our property, and there's a fresh material here we're just not even focused on drilling. So, historically there was a diamond drill hit here of 9 metres at 21 grams in the hard rock. We're not pursuing that. Like, that's an opportunity down the road. So, we're going to talk about risk all through this conversation, but always get back to our investors compensated for risk. And in our stock today, you are compensated for risk in a rising gold market, so the value of our deposit continues to go up. And we're delivering, and we're unlocking it we're delivering through our drilling, and we're going to unlock the value in it through the study. So hard assets have a value, right? So, you can sort of buy Toubani and put it away right now and check back on it in a few months.
Interesting. So then, again, going back a little bit to when you first joined, I mean, was that part of the process that you started setting up, was finding out which the best route forward would be to translation to better results for shareholders? I mean, was that part of it at the beginning? Or
good question. So when I joined, I quickly brought on a technical team to support me, and last year was largely a journey in terms of understanding what Kobada could be. So, we inherited a 2021 study. There was a lot of good work done there, but for some reason the market wasn't finding traction with those parameters of that project. So we went almost back to basics. So we redid the resource. We used Entech, a tier 1 consultant in Australia, to do that. We then brought in Orlogy. So we redid the resource. We then brought Orlogy in to run optimizations on this new resource to understand what throughput can this deposit support. And we were looking at throughputs. The 2021 study was 3 million tonnes a year. We're looking at throughputs up to double that, and try and understand what the project could support. And then we used LICO initially, and we announced this, to run, we use the latest CapEx and costs assumptions to understand what this project could economically deliver, what was the most attractive NPV to CapEx, to production, to grade, to AISC, what should this project look like? And that's what we worked on last year. And then we lasered in on what we wanted to do. And then this year we went and defined a real targeted drill program. So that's the drilling results you're seeing in the market today. Some cracking hits like 71 metres at 1.86 and 45 metres at 2.8 and 19 metres at 20 grams. Like, a timely reminder to the market who hasn't been on the Kobada's journey for long in Australia that this thing has a lot of juice, right? Yeah. And so that drilling now will underpin us going full steam ahead into the study that we know, internally where we're striving to get it towards, and that's what we're trying to deliver on.
And that's part of the roadmap forward, isn't it? And I mean, we'll talk about the capital raising as well, but the definitive feasibility study and its importance. I mean, for many, you see that phrase, or even those three letters put up on I guess the roadmap. But I mean, why is that so important to get done? And what are you guys hoping that it will help show in regards to getting this project further down the pipe to making it into a mine?
Yeah, all our decisions about taking this from project to mine, like, what are the decisions that, whether it's Toubani or someone else, that makes this thing take the leap from project to mine? Look, we don't want to keep spinning wheels here as a project. We've got critical mass today. And so we can drill forever at Kobada. This thing will grow for years to come. Yeah. That's not the problem. The problem is, how do you get this to go from project to mine in a tougher regional dynamic, but you've got a rising gold price. And so we're trying to get we're striving for the lowest technical risk project we can do, which is why we think it's better at scale, and we think that will be attractive to a broader suite of broader audience, whether it's the corporates, the private equities, the financiers, and you need to get the project to that relevant scale and attractiveness, just given the risk profile right now.
De-risking the whole sort of environment of it.
If you need an exceptional project to attract what you need to take this from project to mine, and so we're trying to push this project that extra mile here so that it can become a fundable or financeable project that can become a mine, because Mali certainly want it to become a mine.
And then when you're looking at that, I mean, what are the sort of timelines in place to have this ticked off? I mean, is that towards the end of this year or early into next year? And then, I mean, without putting too far ahead, I mean, of course, you've got to be thinking to the future. What happens after that? Is that when you get the re-rating and then the financing and then that next evolution? Or what's going through there?
Yeah, so look, we're trying to put a bow on this thing. And so we're telling the market that this capital raise is to deliver that feasibility study in the third quarter. And then from there, we'll move into sort of early engineering work and convention agreement discussions with Mali as it approaches that FID milestone sometime in
FID, if I may?
Final investment decision.
Gotcha. Cool.
Approach that type of milestone, say mid-2025. And there's not many study-level projects in Africa, period. And certainly in terms of the timeline to someone being able to press a construction decision button on an asset, we'll be one of the more advanced projects in that regard. So so loosely, that's what we're aiming for here, is study in the third quarter, and then we'll shift into those the other de-risking things like the convention agreement, which is the final agreement you have to agree with Mali, and you start some early engineering work and some other in-country work in 2025 to that FID milestone.
Gotcha. So there's a fair bit happening with that priority, and you said at the outset about the indications that you guys got, which was working with the Mali government, but also the local communities. And I mean, going in initially with that, you probably had to build up relationships or inherit relationships. I mean, how did those discussions go, given that I can imagine you're probably flying there and seeing the people a fair bit? Or what's the, I guess, team on ground? You said a lot of locals. How did you sort of build that into the whole company structure as well?
Yeah, look, we're fortunate enough to have a really strong in-country team. But when I go to Mali, I always make a point of just going down to site and seeing. It's an easy site to get to from Bamako, but going to see the villages and the village chiefs, because we need their support for the mine. And they say to me words to the effect that we just want to see this become a mine because the project's been there for some time. And so they just want to see it developed. And they say things like they want their sons to work at the mine, things like that. And so we do what we can with our budget constraints to support the local hospitals and schools, and we did our inaugural soccer game with them, Toubani versus the villagers this year, and so we're lucky in that regard that they want to see some investment down there, and then the Mali state. Well, that's another set of dynamics.
Yeah, gotcha. And going back to the capital raise point of view, I mean, we're recording now. It's just come out that you guys are raising $4 million or just under for the definitive feasibility study. I mean, talking through the reasons behind that, of course, good to have some cash in the bank balance. But I mean, where do you see that potentially progressing, and what was the appetite from investors, current and new ones that came on board?
Yeah, look, it was a really well supported raise. Like, I was very happy with the outcome. And new institutions we brought on board, and follow the smart money is something I would suggest. Like some pretty smart guys running resource funds participated, and it gets me back to this. Hard assets have a value in the gold sector. It doesn't matter the cycle, and these guys, they acknowledge that. They're patient. They know what we're trying to do. It was a really strongly supported raise, Australian $4 million, and this will take us to deliver that study, badged by Lycopodium, and all tier one consultants were, like I said, being used here to do that. So that's what those proceeds will go towards.
And again, it's all going towards the Kobada project predominantly. And I mean, the interesting bit that must be going through your mind is you're progressing that towards development, but you said you've still got a huge amount of other area to explore and potentially start considering. And thinking about that in the back of the mind, is there much sort of thought process about how you even approach it, or is it all just full steam ahead, get this one done, dusted, get the DFS, get it into the re-rating and the production? I mean, what's really going through the brain there?
Look, it's a good question, right? And I think about it every day. Where should we spend the dollars to get the best outcome for shareholders, right? And we came to the view that, and this gets back to our back to basics technical work, where we redid the resource and ran optimizations. I spend $1 million infill drilling this deposit and converting waste to ore, hopefully. And that $1 million unlocks X million dollars in NPV value for the project. So to me, that's value accretive for shareholders. We can go and drill these regional structures, which we did last year, and we got hits on all these new targets. But the market's not paying you for that today. It's a choppy market. They're not rewarding companies for doing that per se. So for us, it was, how do we get this project to be where it needs to be? And that was the best pathway, the most expedient pathway to realise value for shareholders and get the share price to respond. It was engineering and ResDev drilling here. That's where we thought was the best bang for buck, and that's what we're doing. But if we had, we'll see what we're working on through the next 12 months. If we're fortunate to be where we have that surplus cash, then we'll go away and we could drill out resources on these other shear zones, these other targets. That's not something that I'll again lose sleep about. But it's about what pathway is going to get this asset to get traction in the market. I think that's the one we're on.
And the point I didn't actually press you further on was, you said if this was in Australia or Canada, it would have been gone 50 odd years ago, and talked about why it's a low-cost operation given its differences. And for me, not having much of a background within why is this resource unique in that regard, that if it was in Australia, it would have been taken, and now it's a low-cost operation. Talk us through, I guess, why that's the case.
Oh, look, I make that statement because it's a near-surface, shallow, simple pit. A lot of the old-timers in WA, several of these projects that you see, they're cutbacks on a previous pit that was mined out X years ago. And I'm not a geologist, but, I don't see too many projects here with an abundance of oxide ore. You're generally pretty quickly into the hard rock. Whereas we've basically, all the drilling that you've seen so far this year is all oxide intersections. And so something about that Sagiri Basin there where the weathering profile goes quite deep. But, Africa's a little bit behind in its evolution to these assets, and so you still have those opportunities. Why companies go to West Africa, you can find assets there you wouldn't necessarily find here in a crowded Australian market per se.
I saw it on the one of the presentations, pretty much comparing the two, the hard rock versus the oxide, and showing a lot of the stages within that, I guess, mining process that get removed, and you just see that as there's no costs needing to be associated. Which, well, hey, fantastic. Yourself, being the CEO, I can imagine you've brought in a bit of expertise in country, but also back here. I mean, who's been supporting you and around you in building this team from a board perspective, but also just to the technical and the others within the company?
Yeah, we got so on our board we've got an ex-Glencore mine builder person on there. We've got another ex-World Gold Council. Large cap mining CEO in North America, a highly connected guy, and then we've got another guy who's got a track record of realising value in this junior end of town. So we're feeling pretty strong about the board, and then in the management team, we've got no shortage of geologists in the company, which is where we took this company back to basics. Right, we redid the resource model. So Kerry Griffin and Bill Oliver, they're very mature, seasoned guys, experienced in West Africa. And then, when you're in the junior end of town, you got to make your budget last as long as you can and use your resources wisely. So we've surrounded ourselves with some very strong consultants, like the Lycopodiums, the Orlogies and the Entecs of the world, to really drive this study now. So that's the level of expertise. And like I said, in country, we've got guys there that have been with the project for 15 years, so know their way around Mali.
And you were saying earlier, even when you started, gold price being at 500, and now, from an Australian point of view, it's well over, 3.5. In the US, it's, probably floating around that 2.2, 2.4, some serious intraday spikes. Looking at that and, the impact that will have on projects as they come close and closer to production, but thinking back to last year, did you ever really consider that was going to be such a rapid increase in the gold price? And from devil's advocate, do you potentially see it retrenching or going back? And how is that potentially impacting? It's different being an explorer. As soon as you become a producer, it's a much better place. But how do you see those dynamics impacting Toubani if they do?
Look, I used to be a mining analyst, and you get asked about the gold question all the time. I've sort of given up trying. Like there are
trying to predict it or
few charts that I look towards, but I just sort of keep it simple, right? Like I think you're pretty hard pressed to come up with arguments to say that gold becomes less relevant in the world, right? There's buying, selling thematic to gold. I'm not convinced. I think it's it's the financial instrument that it is that really underpins. And if I think you're going to have a hard time convincing me that the risks in the world are abating and gold becomes less relevant. I think you've got a much easier time selling a story that gold becomes more relevant, and then I would just leave it there. That means gold's going to be relevant, and I'm not surprised to see it go through what it's going through now. We were in the doldrums for a few years here. So gold price is there, and that's the first bellwether. It's when does the market capital start to flow your way? You can make the point that it's coming into the larger caps, but when does it flow to the junior end of town? But that just makes me even more excited about Kobada, because we've got the gold price going up. I've got drilling results showing unlocking value in the project. So it's our hardest time will be what gold price we use in the study. Right. So generally when the gold price is moving, costs go with it. Generally, if you go back in time with gold companies, they have sort of a margin that trade, whatever it is, 30 to 40%. That tracks the gold price. But right now, I don't think costs are shooting as fast as what the gold price is. So this is a great time to be a producer.
Yeah, exactly. And it's like, where do you put the mark to be like thinking ahead for all those worst case scenarios? But even if you're using the level from, a year, 2 years ago, you'd be quite comfortable knowing that it's almost a bit of a safe spot.
Well, but we're trying, like I said earlier, we're trying to have a low cost asset here. So you pick your gold price, the economics should still work, right? Yeah. So like Perseus with Yare, Sanbrado, West Africa, low-cost mines, right? Even in Australia, Capricorn, Gold Road, low-cost mines are the ones that work through all the cycles. Yeah. And so Kobada, if all this oxide ore is what we're talking about exists here, then it should have a low-cost structure because that's the cheapest ore, right? So that's what we've been underpinning our strategy is that.
Yeah, it all goes back to the beginning bit, which I was like, it just seems like quite a luxury in the regards to not having to worry about hard rock, at least at the moment. And I always encapsulate conversations like this with key takeaways, and I think there's probably quite a few more than three. But if you were to summarise the conversation that we had with three key takeaways that investors should keep in mind going towards end of 2024, potentially into 2025, what would some of those key points and considerations be?
Yeah. Look, for me...
It doesn't have to be three.
No, but look, I'll just try to summarise it succinctly. We've just raised capital. We've been de-risking this project. And as an investor, you can buy a portfolio of stocks. I would just strongly encourage you to add Toubani into that mix. don't sweat it day by day. Just put it in the portfolio and let us get to work. Because right now, lots of the heavy lifting's been done, and now we've just got to go and be really measured and smart about how we go about this study, deliver that study, and hopefully surprise the market to the upside and its potential. And again, there'll be headlines that come out of West Africa from a geopolitical perspective, but again, I focus you on those two things about a country that you should just care about: local and government support, and finally, are you compensated for the risk? Like, okay, we trade at $5 an ounce, right? And companies that get taken out of West Africa get taken out at $50 an ounce.
Yeah.
My peers are trading at $13 an ounce. Like, you're compensated for the risks that we've been talking about. So I think, you just focus on that. You can see that in the last 18 months, advanced development assets in West Africa find a home, and good projects become mines, and that's what we're trying to do with Kobada. And so if you focus on that, I think you can't really go wrong here at, 12 cents a share today.
Yeah, no, I think that's a perfect summary, to be fair. That's almost the podcast's done in about a minute and a half. But
done a few of these.
Yeah, it sounds like it. From the people wanting to follow this story now and potentially stay in contact with yourself or just the team there, I mean, where can listeners and viewers go to monitor Toubani other than just the ASX announcements and putting it in their watch lists?
Yeah, you're always you can contact me anytime if I'll answer any question. But we've got all the socials and things like that. But you sign up to the subscriber page on our website, and you can email me direct at any time, and that you'll get all the information you need on those things to monitor our progress here. So yeah.
No, good. I think companies these days, you have to be so accessible. It's
sure.
Even over the last handful of years, I've never seen CEOs be more sort of open to just phone calls and just emails all the time. It feels like almost a job that you signed up for. You weren't necessarily expecting to do it all, but now it's just part of the job. But yeah, thank you so much, Phil, for taking the time to speak with me. There's a lot going to be happening over the next 12 plus months and an exciting area as we've talked about. But yeah, thank you so much for taking the time to speak with me on the show.
Thanks for having us, mate. It was a nice conversation. But yeah, anyone can contact us anytime. We're always open.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.